since you're targeting a young audience, some of them might not know what the stock market is or what it means when you say you're investing in a stock. So could you talk about that a bit?
So basically, stocks are the funds, the biggest companies in India are listed on the stock market. Something like Reliance or Tata or multitude of others. Something like ITC, which might relate to a lot of your younger audience because they produce Gold Flake also.
Right.
So for example, what they do is in order to grow, they need to sell a stake in their company, and the people who buy it are people like you and me, who don't have a lot of money with them, but they have enough money that they can buy 1 to 10 shares of that company. So there are millions of people like us who help them grow, and when they are profitable, if they are profitable, the share market rises, and then you can sell it and make a profit on it.
Because it's a very symbiotic relationship. When you as an investor give your money to the company, it lets them take steps that will let them grow, and at the same time you are getting your returns on it as well. So it's extremely symbiotic. There's a sort of a synergy in play here.
Whereas a mutual fund, the reason it is much safer is a mutual fund is a AMC, that's an asset management company, which pools in everybody's money, like thousands of people's money, like be it 1,000 rupee or a 1 lakh rupee investment, they pool in their money together and they buy into a multitude of shares.
Okay.
So for example, a single mutual fund can hold the top 50 shares of the Nifty.
Okay.
That is the index in India which we base our assumptions on.
You can go ahead and explain Nifty.
Okay, so basically Nifty 50, that's a saying you might hear a lot. Something like a Sensex and a Nifty, that's on most of the news channels.
Right.
So Nifty basically comprises of the 50 biggest companies in India, and Sensex does the same of the top 30.
Okay.
So they are basically the BSE and NSE, that's the Bombay Stock Exchange and the National Stock Exchange.
Right.
So basically that acts like a benchmark for how the country is doing. So for example, when you look at each financial markets in the world, you always look at something like a Nasdaq.
Yes.
That's the New York Stock Exchange,
right,
or New York Stock Exchange for that matter.
Right.
So they are basically like a benchmark about how the country is doing.
Right.
So it's basically, you can say, as a sort of a scale, a sort of an indicator that actually indicates how well the businesses in your company or in your country are doing.
So if Nifty is higher, then Indian businesses
Yeah, so
are doing better.
a growth in any of these indices actually means a progress in the health of the businesses in your country.
So for example, the basic assumption, the basic reality is if the Nifty rises by 1,000 points, that means the below 50 companies that the benchmark is made up of are rising.
Right.
That means the reason they are rising is because they are giving better returns and they are being more profitable. And when they are more profitable, the country is more profitable.
Okay.
By way of taxes and other employment opportunities.